Hi friends, welcome back for Bitcoin Technical Analysis, and let's take a look at the chart. So up behind me you can see I've got the 24-hour chart. Above my head you can see the price is currently 5,200 or so, depends on what particular second you're trying to say that sentence, and where we currently are is below the 236 Fibonacci retracement point on a Fibonacci drawn in from the highs in Valentine's Day down to the lows that we just experienced there the other day at 3,900-ish price. And what am I expecting for Bitcoin? Well, kind of more of the same, to be honest with you. I expect that it will probably still continue to range in this overall area between the lower end support that we've potentially got here at 4,800 or so, up towards the resistance here at 5,450 or so, with give or take some in between times where you could see some people potentially rushing into the long positions up here in the higher 5,000 prices, which I think would be a bit foolhardy. And you can see people, you could imagine people rushing into short positions in here below the 4,800 position, which of course as well could be a little bit premature, as we don't quite know what's going on with the market quite yet. If there was anything to be particularly said about it, is that you have to be bearish right now. Really, you can see that the strength of the trend has only ever really continued to go towards the upside. We do have a touch of potential. Just get this up here, bullish divergence on the stochastics, but when we look to the other oscillators, you can see that it's not so apparent here. So if we look between the lows over here in the 1st of March to the 13th of March, then you can see that perhaps there's what you would consider to be bullish divergence. Of course, we haven't actually really set in a low yet. That's the thing. We have a low here, sure, perhaps even over here, but we haven't really put in any highs to sort of say that was a low, you know. So until such times as that happens, which would be, you know, the price is going up a bit more, I would say, then, you know, we can't necessarily say that that's the case, and it's not showing on the RSI either. However, if the prices were to come down a bit more towards that 4,800, 4,700 level and not follow through on the stochastics and the RSI, then you'd have got well, you would have more bullish divergence potentially showing up here, and it could be trending towards the upside, and you could also have some start to show up on the RSI. Now that's definitely premature. That's getting ahead of ourselves. That's just kind of looking for things which are counter trend, you know. And as you can see, the trend, for instance, there on that oscillator is very much to the downside, and so it is on the price action as well. And if we look down towards the lower time frames, what can we see here? Well, it's kind of the same sort of story. If this was a downtrend, then you've got bullish divergence showing up on the oscillators down below, but you know, we're consolidating, which makes things the same story. The same sort of price targets are in mind, you know, with the 5,500 or so area there, and we want to be seeing the prices go above the 21 moving average, exponential moving average on the 4-hour chart here, and open and close decent candles above there, so we can start looking down towards these oscillators and thinking that maybe they're telling us the truth, because they are saying that there's bullish divergence currently. But of course, when we look to those bigger time frames, really we're just consolidating in this sort of area here. The same sort of story is showing up here on the 12-hour, where you could see that the strength of the trend is perhaps turning around a wee bit. As you look down towards the 4-hour, you see that perhaps again some more looking at the ADX, and if you look down then to the 1-hour, you can see that they actually crossed over and it looked like they might cross back again to the negative side. Who knows? You know, this wrapping around of the lines is what we're kind of looking for to happen across the bigger time frames, and you're seeing it sort of little by little, and we've been keeping our eye out on this over the last few days. So what we need to see happening on the bigger time frames, for instance the 2-day here, is for this to get sucked right in, crossover, and for the blue line to come towards the top side. And you want to see all the rest of these things doing similar sorts of things at the same time. You want to see the blue line crossing over the red line here and moving back up towards the top upside, or else we're continuing to be bearish. That's what the story is that we're playing out here. Then, you know, it's the same thing. Could make that big and show you, it's the same sort of thing. We're talking about what's going to need to happen for us to stop being bearish, you know, and it really, we would get more bearish, I suppose, if the prices were to close below 4,800 and look possibly back down towards our 3,900 price point yet again. But of course we're going to operate here without FOMO and greed and fear and all the rest of it, and just look at what we've got in front of us. So in terms of the big picture though, if this were to be the case, if this Gartley formation were to be the case, that would be a bullish thing. And we could look up towards the 14,000 price point in terms of where this could potentially go over the longer term if there's a positive scenario. But right now we're operating under circumstances which are being imposed upon us in the world by the coronavirus and all sorts of things. So there's a degree of what's that word? Extraneous. There's extraneous factors at play here. So like the things that are happening outside of the charts themselves. But if things go to the downside, then where are we really looking? And of course, the first big checkpoint, benchmark, profit-taking zone, and area for expected support, should things go to pot yet again, would be down here at the 3,200 area, where we saw the prices drop down in the December lows. So you know that would be that. And but currently we're keeping our eye out first off for the sort of 3,900 area if things go to pot, 4,000 of course, and around those areas where you've got the psychological level of 4K. Of course, I've got a couple of horizontals here, and but really, you know, the story, I think, just to zoom right back in again to the micro, is going to be operating between this sort of this area here of the 5,500 and this area here of 4,800 or so, give or take a little, and that's where I would be managing my risk and my entries and exits and all the rest of it. In the meantime, should things take off to the upside, then of course the first big profit taking area will be in around that 6,200 area, depending on where exactly you look at it. It could be a bit lower, it could be 6,000 itself, that we find that at, and or of course we could go up and actually reach the 382 and get up to 6,400. So you know, there's a few different things at play there, but we'll have to wait and see how things pan out above and below that there. Okay, so I've repeated myself an awful lot during this, and I've managed to get 10 minutes of video. Thank you so much for tuning in. If you stayed to the end, it's remarkable. So you've managed to make it to the end of this video, and I just wanted to say a big old thank you to everybody who's liked and subscribed over the last wee while.